Welcome back to another monthly update for the SOXL Challenge. It is Friday evening, February 13th, 2026. First, let's talk about what's been happening in the semiconductor industry. Although Nasdaq has not been doing well for the past 5 months, semiconductor stocks have been outperforming during the same period. About a year ago, many experts predicted that AI would increase semiconductor stock prices first, and then move to the software sector stocks later, as we saw during the dot-com bubble. However, only the semiconductor sector is doing well while the software sector has plummeted. The software sector is facing extreme turbulence dubbed the SaaS-Pocalypse, triggered by Anthropic's release of agentic tools like Claude Cowork and Claude Code. This shift has changed the narrative. AI is now seen as a direct threat to traditional seat-based subscription models rather than just a supportive feature. Investors fear that automated workflows will allow single users to do the work of many, slashing demand for specialized licenses and eroding established software moats. This sell-off has caused double-digit declines for high-growth and established firms alike. Salesforce and Intuit face pressure as their core functions risk being replaced by direct AI interactions, while ServiceNow and AppLovin have seen pullbacks over fears that agentic plugins will bypass their platforms entirely. Even Palantir has been swept up in this broad retreat. While some argue proprietary data remains a defense, sentiment remains wary as the industry recalibrates for a world where AI performs the heavy lifting. In contrast, the semiconductor sector is flourishing despite the software downturn because the market views the agentic AI revolution as a massive catalyst for hardware demand. While software firms face a crisis in their per-seat business models, the AI agents replacing those roles require an unprecedented amount of computational power to function. This has shifted investor capital to the infrastructure layer, fueling an arms race where chipmakers are seeing record orders. Major cloud providers have significantly increased their capital expenditures for 2026 to ensure they have the processing capacity for these autonomous systems, creating a structural gigacycle that has largely decoupled chip stocks from their traditional cyclical volatility. Furthermore, physical limits in high-performance computing have created extreme scarcity in essential components like high-bandwidth memory. Companies like TSMC and Applied Materials report that their 2026 production capacity is already virtually sold out, leading to significant price hikes and expanded profit margins. Even specialized chip design software is benefiting by accelerating the development of next-generation processors. Ultimately, market logic suggests that while the future may require fewer software subscriptions, the global economy will need vastly more silicon to power the digital workforce, making semiconductors the primary beneficiaries of the AI transition. Based on this context, let's review SOXL. SOXL closed today at $64, which is a jump from last month's $60. It has been a true roller coaster period for us. We saw SOXL peak at $70 back on July 11, 2024, followed by that brutal crash down to $7 on April 7, 2025. The recovery really kicked into gear after that, with SOXL climbing to $64 today. We even hit almost $72 on January 29, 2026, which is higher than the previous peak price of $70 in 2024. From this SOXL daily chart at Finviz, you can see that SOXL is characterized by high volatility within a strong medium to long-term rising trend. SOXL remains in a positive long-term stacked alignment, trading above its 50-day and 200-day moving averages. A break above the $72 level would signal a continuation of the bull run, whereas a close below $60 could lead to a deeper retest of the $54 support zone. My prediction is that SOXL will move above the $72 double top line sometime soon. We saw the similar double top line at $50 at the end of October and mid-December, but SOXL was able to move above the double top line of $50 in early January. Then, this $50 became the support line in early February where SOXL was able to rebound. Let's examine the SOXX daily chart in detail. SOXX has kept going up. SOXX hit the all-time high price of $365 yesterday. It closed today at $354. For those new to the channel, SOXL is a triple leveraged ETF that magnifies the daily movements of SOXX, which tracks leading U.S. semiconductor companies. As of today's close, SOXX is maintaining its position above both the SMA 50 purple line and the SMA 200 green line. To be specific, SOXX broke above the SMA 50 purple line on May 6, 2025, and successfully cleared the SMA 200 green line on June 4, 2025. Although SOXX slipped below the SMA 50 purple line 3 times since the Golden Cross, in September, November, and December, it was able to rebound above the SMA 50 purple line each time. It will be crucial to monitor whether SOXX can hold the SMA 50 purple line or at least find support at the SMA 200 green line. We witnessed a Golden Cross formation on July 8, 2025, when the SMA 50 purple line crossed above the SMA 200 green line. The previous Golden Cross occurred back in January 2023. Following that signal, SOXX embarked on an incredible 18-month rally. If history repeats, we still have potentially 11 months of upside ahead of us, lasting until January 2027. On this weekly chart, SOXX has been above the SMA 200 green line since November 2010. I expect that this pattern will continue for many more years. Now let's review my current holdings. I am not adding new shares this month since I have already invested about $21,000 during the first 2 years of this challenge. Going forward, I am sticking to my plan of approximately $7,000 in annual investments. In my Roth IRA, I am holding 354 shares at an average cost of $24.71. The current value is approximately $22,800 with unrealized gains of about $14,000, representing a 160% return. My individual taxable account holds 525 shares with a current market value of approximately $33,800. Combined, that is 879 total shares worth about $56,600, up from last month's $53,200. My core philosophy remains the same. I will buy and sell based on the SOXL Surge Strategy, a term I coined based on the semiconductor sector's pronounced business cycles. It is a long-term swing approach tied to SOXX trends. Looking at the historical pattern on this monthly SOXL chart, we see major dips every 2 to 3 years. We had $4.33 in March 2020, $6.21 in October 2022, and $7.23 in April 2025. Similarly, we see peaks every 2 to 3 years with $74 in December 2021 and $70 in July 2024. The pattern shows that major dip prices are going higher in each cycle, from $4 to $6 and $7. I also expect that the peak price in this cycle will be much higher, possibly $122 or even higher. Thus, in this current cycle, I may look to sell SOXL when SOXX reaches about $500, or in October 2026, whichever comes first. Of course, this number and timing can be adjusted later. For more details on my 2026 exit plan, you can watch my short video titled SOXL $122 Target. My 2026 exit plan. Despite the volatility, my conviction in semiconductors remains rock solid. AI, cloud computing, and high-performance computing are still in the early innings of a massive transformation. Patient investors who stay disciplined through the inevitable ups and downs will likely be rewarded with substantial long-term capital appreciation. That is your February SOXL Challenge update. We are in this for the marathon, not the sprint. If this update added value for you, smash that like button, hit subscribe, and drop your thoughts in the comments. Stay disciplined, stay patient, and keep building that wealth mindset. I will catch you next month. Peace out, SOXL family.